Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 21st Commitments of Traders report of 2025. And as we always do, we shall start off by looking at the largest changes in commercials net positions. Of course, we are analyzing the classic COT report type, futures and options data combined. Before I jump to the review, just a brief reminder for those who are new to COT analysis here at COTBase.com, you will find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well that can guide you through the analysis process. I'd also like to draw your attention to our new summer deals. I know it's starting soon, but if you are interested in taking advantage of our great prices for our most popular services, then please check out this page. Back to the review, and starting off with our first market, which is crude oil, the Brent crude oil to be specific. We have a 27% change in commercials net positions based on a 52-week look back period, which of course corresponds to 1 year. So that's a 1 year chart. We've got commercials represented with the red chart over here, green representing large speculators, and non-reportables, or as we call them, small speculators, are in blue on a separate scale chart. So the recent change can be witnessed in commercials net positions at the end of the chart over here. That's 27% of this entire range. If we look at the most bullish and most bearish COT extremes, it's representing about 27% change. It is a bullish change signal suggesting strengthening coming in the near future. If we move to a 5 years chart, then we can examine the stress levels in this market. Now, if you look at just commercials, so we can actually take off large speculators this way, you can see that they're like an RSI. It's moving between these two extremes. It is on the bearish side of the spectrum. So it is a more of a bearish COT extreme, but I should point out that WTI crude oil is the more popular crude oil of the two, and I would definitely advise examining that market before you make any serious decisions on the Brent crude oil. Now, I should point out we have an amazing indicator that we developed after many years of research, bringing you COT analysis into the shorter time frames. I will start off with the daily candlestick chart. This is light crude oil. The futures contract, we have the iCOT scores lines underneath. So these are, this is basically part of the indicator. It measures strength in the market. It's based off of traditional COT analysis techniques, and it is basically measuring stress in the market the same way as we do with the classic COT report that is issued by the Commodity Futures Trading Commission on a weekly basis. This is something that you can use in intraday trading as well. So this is a daily candlestick chart. You can see how well the indicator catches the extremes in the market. So it's a very good supplemental tool. But if you want, you can bring it down into the shorter time frames, and you can see how it performs on those as well. You can see that around these tops we get these vertical red lines. We call them stripe signals. It happens when we've got commercials and large speculators at an extreme. When the market comes down, there's a bullish opportunity. It's coinciding with a green vertical line, a bullish stripe signal. And then we have some bearish stripe signals around the top over here, followed by some bullish signs as we're getting deeper down. So it's a very unique tool. If you'd like to read more about it, I would advise you to come here to the indicators page. We have two versions of the indicator, the iCOT Intraday Indicator. We can call it the basic version, and then there's the updated version, which you just saw. It's called the iCOT Intraday Indicator with AfterSignal. It filters out a bunch of signals, but this chart over here will explain to you the different type of signals there are. It's quite simple. We've got commercials and speculators. However, it's not the actual COT data. It is our own unique indicator. This example is actually on gold on a 1 minute candlestick chart. We've got signals from the speculators, the green line, that happens when they are at an extreme limit over here. You can see that the candlestick itself changes color to blue, even if it's a bullish signal or if it's a bearish. That's what happens. The candlestick changes its color to blue. In case of commercials, if it's a bearish signal, then you get a yellow diamond above the candlestick. If it's a bullish signal, you get the diamond underneath the candlestick. Now, if we have both of these at the same time, as I just showed you on crude oil, we get these vertical, we call them stripe signals. These are the strongest signals, and they can be quite effective, actually. Let's move on to our next market, heating oil. We talked about heating oil last week. Seems like we still have some decent changes in the market. So last week we had this bearish COT change signal. It came a bit late for us, but it did actually push the market lower. At least it did not allow heating oil to rise. We are now reading an even greater change signal, suggesting we may see further weakness coming. But before we come to any conclusions, I would always advise to look at the wider picture. So open up a 5 years chart and examine historically where traders are standing. And if you look at, again, if we just focus our attention on commercials for now, you can see that there's not too many instances when commercials are net long. They're usually net short. Of course, they are hedgers. They're selling into the future, mainly producers of this underlying commodity. But just around here, late 2024, first part of 2025, where we are right now, we get these net long positions. These are bullish COT Extreme signals. So when you examine the change signal that we just talked about, keep in mind that overall there's a bullish extreme in the market. Moving on to Palladium. Here we have a 20% change in commercials net position. This is a bearish change signal. We have seen a bit of a decline already. If you compare this change to the past 1 year, it's definitely greater than average. So it's something we should take into consideration. If we move on to a 5 years chart, then you can see that the market, or traders in this market, are leaning towards the bullish side of a COT Extreme. It can widen, but definitely supports higher prices in the medium to long term. Moving on to large speculators COT Extreme analysis, we have soybean meal on top of our list with an all-time commitments of traders extreme. So never in the history of COT data, when we're examining futures and options data combined, have we seen large speculators or commercials at such a net position level. So it is a significant extreme. It suggests that soybean meal should be heading higher in the next couple of weeks, month ahead of us. And if you examine historically what the market has done to these bullish extremes, you can find that it reacted very, very well. So I think it's a good risk reward signal for soybean meal. Moving on to corn, 36 report extreme in large speculators. But of course, if you just look at the number, it doesn't really say anything. So always open the charts, okay? Make sure to visualize what the traders are actually doing. So commercials, a little bit bullish, large speculators, same here. So it is a bullish COT extreme in corn. Nothing crazy, but it does support the thesis that we may see higher prices in the next couple of months ahead of us. Grains complex, we in these complex markets, we basically, what we do is we combine all the individual underlying commodities into one complex COT data, and we chart that for you. But we're going to jump over that and open cocoa. Here we have a 12 report extreme. It's on the list. I have to show it to you. It's in order. But if you open the chart, you can see that it's not really an extreme we should be too excited about. If we go back and look at a 3 years chart, same thing. I can argue on it, let's say a 2 years basis. This is maybe leaning towards a more bullish COT Extreme over here. What we can do, if you want to look at it in a different way, we can say, let's have a look at a 3-year COT Index, and we are going to chart it. So let's go back over here to COQUA. And now we have the COT Index. It's just a bit different way to look at the report, because if we index it, it goes between 0 and 100. So you can see that over here at these lows, commercials reached a 67. Now it's definitely not 100, but I mean, what we can do, if we, let's say, look at a year, then you can see that there was a COT Extreme in that sense, right? Like, depending on the look back period, we can of course see that within that time frame, it's more of an extreme. So just showing you the ways to analyze the report. Now, of course, again, if you look at a longer time frame and you measure recent report compared to like a 5 years look back period, then maybe the extreme is not there, not that significant. But it's just good to note that if you are trading this more actively, and maybe sometimes look at just a 1 year COT Index, that can be beneficial as well. That is going to be all for this COT review. If you have any questions, feel free to comment underneath the video. Send us an email to info@cotbase.com. If you enjoyed the video, please hit the like button. And if you have not yet subscribed, consider subscribing to our YouTube channel. Thank you very much for your attention. Have a great weekend. See you next time.